Alright guys, I'm gonna just make this video real quick to go over all the stuff that I post in the market updates channel so you guys can get like a better idea on how to use it and what it is. So the first thing I'm gonna go over is the SPY sentiment, which is probably the most important one if you're swinging. So what this is, you can kind of think of it as an RSI for SPY. So looks at the number of calls bought versus the number of puts bought. It looks at the volatility, price, and a couple of other things. So it's going to be overextended up here and then oversold pretty much down here. So you can think of it. So the sectors right here, this is just the 10-day moving average of the sentiment of each of the sectors. So it's like a little bit more conservative of a indicator than just this, but it's pretty useful if you're like looking to get in certain plays of whatever the ticker is, whatever sector it's in. So the hedgers exposure, this is how exposed hedgers are in the market. So up here, the hedgers are going to be pretty exposed, which is bullish. And down here, they're not going to be exposed, which is bearish, means they're avoiding whatever positioning. So this is the number of contracts long minus short of commercial hedgers. So really where it's at right now, like sitting at 50K, that's not really like they're sitting on 50K more long contracts than they are short. So it's not significant at all. Like something up here is going to be like a lot more bullish than it is right here. So they're not really aggressively positioned in any direction. Okay, this one is probably my favorite for like mid to long term lookout because it's only the AAII is a fundamental trading group, so they don't look at technicals at all, which is like usually what I do or what I think most people do who are trading. Like they only look at fundamentals. So like down here they'll be saying like whatever percent of them is bearish, thinks the market will be down from where it is right now in 6 months. So this last week it shot up a pretty decent amount, which is a lot more bullish than it closed last week. Okay, hedge fund exposure. This is just how exposed hedge funds are. So at first, like it might be kind of hard to think of it. Like it's kind of the inverse of what you think. So if hedge funds are overly exposed, like at first I thought that was bullish, but when they are really exposed, whenever they dump stuff, like if they dump whatever, however many shares they have, bring, it's gonna add a lot of selling pressure to whatever ticker that is, and lead to a lot of downside. So when they are highly exposed, you just want to be careful. And when they're not exposed, when they do start adding positions, it's gonna add a lot of buying pressure. And yeah, that's basically it. So the AAI bears this one, the net long of commercial hedgers and hedgers exposure. Those are all updated weekly, so they're a little bit more long term. All the sectors, sentiment, hedge fund exposure, those are not. So hope you guys kind of got an idea of what all this stuff is and can use it.